What's up, investors? Welcome to the channel. This is the Semiconductor Show, where we talk about stocks that are related to the semiconductor industry. Today we're going to be touching on Micron technology. This is the first time I've touched on them, and the reason why I chose them is because they recently released their Q2 financial statements. And so they've had beats on everything pretty much across the board, at least in terms of revenue and income. And so I thought this one is something that we should at least take a look at. And so we're going to just take a brief glance at what they're doing this week and this past year, maybe even further back. So at least for this week, they did see a drop on Wednesday. That's when they hit that 85 mark. That's that peak up here. And that's when they released their financials. They had all those beats, so everyone wanted them, and then they came tumbling down. I have to imagine this Thursday immediate drop, that's when AMD, if you've watched my previous video, AMD had an analyst of theirs say that AMD is likely not going to do as well going forward because in 2023, people are starting to think that semiconductors, the cyclical cycle of semiconductors is going to happen in 2023, and so people are going to try to start making moves now to beat the rush. And so that's kind of what I believe is happening here. And then on Friday, some other things that may have happened is apparently there's like a COVID outbreak happening in China, and so that could affect their productions. So that's just an idea. We'll kind of see how this plays out. Going back to, let's just go back a month. Overall, they're dropping. They hit a peak up here around 93. Year to date, yeah, they were around like 94 down to 76. So maybe this is a decent time to buy. Going back a year, they do have kind of waviness happening here with a low 67. So yeah, let's just start with our Q2 results. I mean, this is what kind of sparked my interest. So the revenue for Q2 was $7.8 billion versus 7.7 in the prior quarter. And then last year, this same time, they had $6.2 billion. So they are seeing growth here. But once again, we're in different times here. So let's just kind of keep going through. So their CEO, Sanjay Mehrotra, we're leading the industry in technology across DRAM and NAND, and our product portfolio momentum is accelerating. So Micron, what people say is their weakness, which also happens to be their strength, is that they focus on memory. And so that's what DRAM and NAND is. I believe DRAM is long-term memory. They can memorize a lot of things, where NAND is like short-term. I guess my examples for this would be like DRAM would be maybe like a complex device like your phone and computer. NAND would be something like whatever chip is put into like your washing machine or maybe a microwave, something like that. So short-term, simple processes. So as far as the revenue goes, this just kind of gives us a little bit of a better breakout. We'll zoom in a little bit. So right here, we're just kind of seeing just kind of the flow of the money. Really, I'm just looking at revenue. Net income is definitely important, but I'm more interested in revenue at this point. This is a smaller company. AMD, I want to say, is, they make about $20 billion in revenue, so this is clearly about half that size. So we have to keep that in mind. Anything that happens with this company, it can easily increase or go down very quickly, a lot faster than an AMD type. So let's go out a little bit now. Now that you kind of saw those numbers, so investments in capital expenditures net were $2.6 billion for the second quarter. So they're investing their money into some sort of expansion or research and development. So that's promising. Micron repurchased approximately 4.8 million shares of its common stock for $408 million. So that's always good too. The fact that they're buying their own stock, that shows us that they believe that their stock is undervalued, and so they want to buy it up and hopefully increase the price. On March 29th, so just recently, their board of directors declared a quarterly dividend, which that, once again, we like that. not a massive dividend. Obviously, it's like uh, just the fact that they're giving back to people who own shares. I currently don't own shares, but like I said, I'm thinking about it. That's kind of why we're doing this research now. So they did give a dividend, 10 cents per share, but that's going to happen on April 11th. Or I'm sorry, it's going to happen on April 26th for anyone who owns it on April 11th. So we still have time. If we want to buy some, we can get a 10-cent dividend. Uh, Something to think about. Not going to rush out for that 10 cents though. So let's just kind of keep going. Here's some more numbers. So this is their guidance for the third quarter. So as far as they're concerned, they don't think it's going to slow down. They're projecting 8.7 billion within about a $200 million range. So 8.7 billion, their gross margins at 47. In other videos I mentioned, anytime you can get above 50%, that's like a key indicator that this is a solid business. And so we're going to touch on this a little later. This number is probably a little bit exaggerated today. It's definitely, it's happening. They're currently getting this. It's just, as we'll kind of go through, we'll see why it's a little bit exaggerated for right now. But of course, we'll see how it plays out as the quarters pass. And then the last piece on this one is they're going to have this Investor Day on May 12th. So that's a little bit over a month away, actually. So they'll probably just go over some product details, new offerings, what's coming up. So now let's go into some recent news. This is one of those possible scares for why people might be leaving this stock even after they reported these strong numbers. So Micron Technology said it expects no impact on near-term production from component shortages driven by the Ukraine crisis, but costs are expected to rise. So the Ukraine crisis, if you're unfamiliar, it's actually right here. So Ukraine's two leading neon supplier, which produce half the world's supply of the key chip-making ingredient, have halted their operations, threatening to drive up prices and worsen ongoing semiconductor crunch. So Ukraine has this neon supply, and because they're not facilitating the world with that, because of obviously they're dealing with their own conflict right now, but that is affecting the semiconductor industry, and in this case that does impact Micron, but Micron's saying that they have supplies. I'm not sure if I'm going to mention it here, but they do have, I've seen in other articles that they're certain that they have probably about a month and a half to close to 2.5 months worth of supply already backlogged, and I think we're going to go into, they're already looking for other sources, probably have some. Once again, Ukraine has half of the world's supply, so clearly there's another half, so they just need to find it from somewhere else. So recent efforts to diversify supply and maintain inventories of raw materials and noble gases have helped contain the blow. Impact from the Ukraine-driven supply shortfalls will not show up until about 7 to 9 months later. And this is speaking for the whole industry, not just Micron. Micron is more like I'll say a 2 to 3 month window, maybe a little less. Like I said, maybe 1.5 months to 2.5 months is probably more exact. So we'll see how that plays out. So once again, as far as the entire industry, the impact's not going to occur until 7 to 9 months later, when the global raw material inventories start to run out. And that's based off of Summit Insights Group, that's like an outside source here, so not an internal source. Micron's forecast for the current quarter, so Q3, once again, that's at 8.7, and analysts were projecting 8.0, really. So they're shooting way higher than what the analysts are thinking. And once again, just a little breakdown here. So once again, the NAND and DRAM, that's pretty much their only two products, but those two products are in so many different types of products that they are diversified in a way. Clearly they focus on the two products, but because those two products go into so many different vehicles, they're a little more diversified than I think people give them credit for. But overall, it's helping gross margins as the percentage of revenue rise from 47% from 26%. So that's what I was talking about earlier as far as that 47%. I feel like it's a little inflated because just last year it was 26%. So we have to imagine that is due to this shortage. They're able to jack up the price here, and how long are they going to be able to do that? Maybe till 2023, roughly in there. And so what's going to happen then? You have to imagine it's going to come back down. Just something to think about as you're making a decision on if you want to invest in this. So now moving on to the future, a little bit of the potential here. So as the world adapts to 5G technology, one of our buzzwords here, Micron is expected to benefit greatly as smartphones with 5G capability have 50% higher DRAM and twice the NAND capability as compared to 4G. So I have to imagine that means increased sales because 50% higher DRAM, twice as much NAND. So yeah, that means just more products are being sold, and probably they're more valuable too. Products by the firm are also used in the automotive sector, so EV. That's another one of our buzzwords, high growth industry here, and the server and communication field, and in consumer electronics and computers around the world. So we're thinking the consumer electronics and the computers, that's kind of on the downtrend now. Most people have already bought them through the whole pandemic issue, but now the hot topics are the 5G, artificial intelligence, which it wasn't mentioned here, but they are involved in that to a degree. And then, of course, the electronic vehicles, the EVs, the electric vehicles. And so those are the three industries. They are involved in them. They definitely play a higher role in the 5G, and they want to take a bigger piece in the EVs and AI. They would like to get a bigger chunk of that too. On March 1st, Micron announced it was sampling the world's first vertically integrated 176-layer NAND solid-state drive for data centers. So a little bit of technical thing, but the key thing here is the data centers. And so they're getting into data centers, and that's one of AMD's main drivers. That's one of the reasons why we like them. And Micron and AMD, they do have a partnership. So if AMD's doing well with data centers, you can almost guarantee Micron's also going to be doing good with data centers. And I feel like this is kind of like a little bit of a topping here for us, that they're sampling the world's first vertically integrated NAND type driver here for data centers. So they're showing improvements in a silo, a revenue generator for them and other companies. So I feel like that's a step in the right direction for the company overall. Another reason why I like them is this right here. So they're now just 3 major producers of DRAM and 5 on the NAND side. So they're in a very small group, and rational behavior among the key players began to take hold as competitors began focusing on more R&D. Currently, chip pricing remains cyclical, although less so than in past, and that cyclicality has a long-term upward bias. And so I thought now might be a decent time to show you kind of what they're referring to. So right here, I'll blow this up a little bit for us. This is Micron's trend or revenue over the past roughly 10 years. So this is the cycle of the business that they have. So right here they peaked in about 2014, and then you see them drop close to half, we'll say. So they peaked at around like 4.5, all of a sudden they came back down to 2.9, and then they exploded off to $8.4 billion in 2018, 4 years later. And so we're right around that point again, and you can see they're starting to trend down. And I just want to point out this chart is only showing through Q3 of 2021, and their revenue at that point was $7.7 billion. And so at least for this quarter and the past quarter, they were also around that 7.7 billion mark. So they're kind of going flat right now. So how long will that stay? Are they going to hit another drop of like going from 8 to 4? Like, are they going to have another 50% drop here in the next year? It's definitely possible. And so we have to keep that in mind. Also, if we're looking more long term at this company, we also have to realize that these waves are going to happen where it peaks up here, it comes down, but then guess what? It peaks even higher. Now, we could argue that this is another peak, but we didn't actually go higher. We see another peak, but you know, back here we went from 4.5 all the way up to 8.5. Well, how come we only went up to 8.3? Like what we almost, yeah, it was another peak, but it was the same level. So that's something that kind of is interesting to me. And then to wrap up this article, so Micron is expecting growth in both the DRAM and NAND, not just from the supply of more chips to data centers, artificial intelligence, the auto sector, and mobile devices, but also from greater demand for gigabyte capacity per unit within those segments. And so I thought this would be a decent time to show you just the different segments. So they labeled them this code over here, which it's broken out here. So they have the compute and networking business unit, which that's the memory products involved with the client, the cloud, the server, enterprise graphics. They have the mobile unit, so that's going to be probably our 5G smartphones. And you can see down here, that's pretty flat. Both of those industry, this one's growing, this cloud server. Cloud server is supposed to grow too, but for some, I mean, it's mainly because it says compute here. I'm picturing that's more just computers, and that's supposed to like level out here. It seems to still be growing, so we'll kind of see how that plays out. Oh, once again, this is over a year. I'm thinking this was quarter. This is 6 months, so this kind of shows decent growth here, but fairly flat in the mobile business unit. But these two, the storage business unit, you can see strong growth here, about 30% in both these second two lines. And that's where they're hoping that Micron can kind of up their game here, is this storage business unit, which is, once again, that's the cloud. And I have to imagine maybe that's the 5G section of their business. And then we have the embedded business unit, and that talks about their automotive and industrial units. And you can see also there's about a 30% growth, at least for quarter over quarter, at least from a year ago. And for 6 months, yeah, it's about like 30% in both cases here. So we're hoping we get a better push in those second units and stay at least fairly consistent in the first two. And then we could easily see this kind of level out in terms of maybe like 3 billion across the board for all four sectors. And then all of a sudden this company's like a $12 billion company, and then we made a great buy. So here are some reasons that, once again, sparked my interest in buying this company. This is probably the main one, to be honest, this double-digit revenue growth. So analysts are predicting or are expecting Micron's revenue to grow 17% for this full year. So that's pretty good. And then to rise another 21% in 2023. So these are solid numbers. I mean, anytime you can get above 20%, we personally want 25%, but those are solid numbers. And that's what analysts are saying. And normally analysts are low on growth companies, so something to keep in mind. And just like it says here, the company's sunny guidance suggests those estimates might be low. So good news there. Second point, so they're saying that cyclical slowdown, it may happen, but maybe not for a little bit longer, you know? So Micron generated 73% of its revenue from the DRAM chips during the second quarter, another 25% from the NAND chips. Micron attributed to the strength of the data center market, robust sales of the desktop and enterprise PCs, and the expansion of automotive and industrial markets. And this indicates a super cycle in chip upgrades across multiple industries is far from over. The global chip shortage, which Micron expects is going to last until 2023, will likely prolong the cycle with tighter supplies and higher prices. So once again, that was interesting there. So they're saying that this is going to last till 2023, at least until 2023, but they're also saying this is going to drive those prices higher. And so that's why we're going to have to track this over the next couple quarters to see, is their sales price going to come down? Because that's going to affect their gross margin, which of course is going to affect their net income, which we don't want that. We want their gross margin to be high. We want their revenue to be high. And so if they start dropping the price, that means their revenue is not going to grow as fast. And also, if the prices are higher, that means their gross margin is going to shrink. and that means that 47% is going to come back down to, who knows, maybe that like 26% that it was, whatever they said it was like last year or 2 years ago. So we'll have to keep an eye on that. But overall, good news, at least short term. Expanding gross operating margin. So once again, yeah, we actually just touched on this. So Micron expects its adjusted gross margin to actually rise, at least in the short term, to about 48%. And you can see right here, that's about what it was, 47.8. And just last year it was 32. So it is rising, but once again, the whole industry is constrained, so that's kind of why they're able to charge higher sale or charge a higher price during their sales. That's kind of what's happening here. Limited exposure to Russia and Ukraine. We kind of touched on this earlier, but to wrap that up again, so the CEO said the company had strategically diversified its supply chain over the past few years and maintained appropriate inventories of materials and noble gases. Therefore, it's not anticipating any negative impact to its near-term production volumes. We'll see how it plays out, because it doesn't mention it here, but I know I've seen in prior articles that they believe they have at least roughly about 2 months, maybe a little longer, depending on how sales go. That's how much they're certain they have. We'll see how what shakes out with the Ukraine and Russia situation, along with, are they able to get additional resources from just a different supplier when it ultimately happens. So the conflict could still cause some Micron costs to rise as it secures a supply of certain raw materials that could be at risk. However, its gross margin forecast for the third quarter strongly suggests it will offset those costs with higher average selling prices. Kind of went over this earlier, not going to go over it a third time. So then the last reason to buy this, and this is the ultimate push. This is what I'm kind of hoping. This is kind of what it was touching on with the different segments. So right now, they're saying it's a cheap company. And once again, that has to do with the cyclicality of the company. But currently it's trading at 8 times forward earnings, making it one of the cheapest major semiconductor stocks, cheaper than Intel, which is trading at 14, and we know Intel's very cheap. We bought some of that around like 45. I would say that's the buying point for them if you're interested. But this is what really draws you in. The analysts are expecting Micron's adjusted earnings to grow a whopping 51% this year, and increase another 35% in 2023. And then over the next 5 years, they expect the annual earnings to grow at an average rate of 25%. 25, that's my magic number, 25%. If they're going to grow at that rate for the next 5 years, that's why I want to get into this company. But we'll see what a decent buying point is for them once we get to the technical analysis, which is coming up here. So one of their down plays, and we touched on this also, is that Micron usually trades at a discount due to that cyclical nature. And they are a pure memory chip maker. They're not into these GPUs, CPUs like AMD or NVIDIA is. They just sell memory chips. So that's kind of the downfall with this company. But we just saw a lot of reasons to buy in as opposed to not buy in. So let's just go into the technical analysis. This is our little wrap up here. So it's a blank chart, and I zoomed out really far here. So this is about 4 years. Just because if we zoom in, there's not like, there just wasn't enough here to really go off of, in my opinion. So I wanted to zoom out to the past 4 years to see if I could find, just some decent lines here for us. And I feel like I did. So right around here, it seems like we had let's make that a solid line. We had a support, what's going on here? Oh, here we go. We had a resistance line back in about 2018 of about 65, and then more in today, we had a support line at that 65. So I feel like that's a hard line that if we go anywhere near 65, that is when I'm looking to buy this company. If we can drop below that, which I can't imagine we do, but if we do, I can't imagine we would drop much lower than that. And so 65 is kind of like my magic number for this company. That's when I'd be looking to buy in. We can even we'll draw another line in here for our current resistance line, which is right around 97, high 90s. We can draw one. We'll make this line a little bit fainter just because and we'll leave it at that. So, I mean, that's kind of our sandwich area right here. That's our support and resistance. We've been trading in that range since about late 2020. So for the past year and a half, we've been in this zone. So let's zoom in and just kind of see if there's any other type of resistance / support that we see. We're currently at this 76. I could draw a faint line in here just for fun, right around like this area, right around where we are. I could see this being some sort of support / resistance. I'm not going to make this line too thick, and the only reason I'm drawing that line in there is because, for one, that's where the price is today, and in terms of like resistance, it looked like right around here in our third quarter of 2021, it seemed like we kept hitting that line a couple times and getting rejected. And then even back here in the second quarter of 2021, it seemed like we kept getting close to that and then bumping up, coming close, came back up, and then all of a sudden when we broke it, then we just couldn't get back above it for a little while. So we kind of danced on that line for solid from about May of 2021 all the way up to November. So about 6 months we kind of played on that line. For the first half we wouldn't go below it, and then all of a sudden the next half we couldn't get back above it. And once again, we touched on that $65 mark a couple times, but wouldn't go any lower. So that's why I think that's a solid line there. And then we came back above, tested that 98 level again. So that's twice there. So we peaked twice, and now we're coming back down. Overall, maybe I could even draw, as far as like a short-term like trend line, we could argue something like this, and just draw something like that. We'll extend it out a little bit. Let's move this over some, just so my head's not in the way. We'll draw this, it's not like not enough data, I would say, for this to, let's zoom out some. Not enough to, I mean, there's something there. We'll make it a little bit thicker for us, just so we can see. So yeah, I'm pretty content with this line. As far as buying right now, we're at one of those faint lines. So right now, we'll just kind of see. I'm looking to see if it's going to come back down. Once again, I'm looking for this at 65. I'm not super convinced on this one yet, but if it goes back down to 65, yes, I would definitely be interested in buying some of this. Right now, it's just at that point where, I'm not sold on this one yet. Mainly because I think this one might actually come back down a little more. We can look at the after hours. After hours, not really moving. So it's in the red, but it's not really moving at all there. So maybe another couple weeks. If I had to give you a zone, maybe we could draw another faint line in here just for fun, right around here, right around 70. So if I were looking to buy, if it dropped below $70, okay, I'm interested. I might buy a share or two. If it keeps falling and gets closer and closer to 65, yes, I'll buy more and more of it. But right now, to me, I'm willing to wait for it to come back down to that $70 mark. And so that's me. That's what I'm looking to do for this company. And so that gives me an idea. That gives us an idea of where my head's at with this company. We'll kind of keep track of it as we kind of go along, because they're in those industries, those hot topics that we're interested in, the 5G, the EV, and the AI. So they do have something that's going to get involved in that, and that's why I wanted to look at them and get this initial impression on them. So I hope you enjoyed this. Please like, please subscribe, and we'll be coming up with more of these videos as we go. So I hope you enjoyed it, and I will see you on the next one. Bye, guys.